US dollar against the Japanese yen just hit a 38-year high. Let's explore the opportunities around this currency pair. The Japanese yen continues to weaken even though there is intervention fears. Will the Bank of Japan, also known as BOJ, intervene? And where are the opportunities in this currency pair? Find out more in this video. US dollar against the Japanese yen has broken the 160 level. This is an important level to focus on because traders around the world thought the Japanese government would intervene at this level to push the price down. Overall, traders and myself are seeing these dips as buying opportunities, and ultimately we are waiting for the next one. The last time the Japanese government intervened was back in May. Overall, traders around the world saw this dip on the US dollar against the Japanese yen as a buying opportunity, and price has gone straight back to those levels and past the 160 point. Last time they were selling billions of US dollars and buying up the Japanese yen on the masses. Is this going to happen again, and is this going to be a trading opportunity? Traders at the moment are seeing dovish signals coming out of the Bank of Japan. There is a lack of clarity around how they are going to tighten their policies. So ultimately, what happened there? Traders remain short against the Japanese yen. This is why we're seeing the pair US dollar against the Japanese yen look like it's pretty much on a rocket all the way up. The Bank of Japan is expecting higher wages, and overall this will increase the economic outlook for the BOJ and give them room to tighten their policy. But with the big difference between the US dollar and the Japanese yen is the interest rates. Even if they are looking to tighten policy because of good consumption from increased wages, the discrepancy in the difference between the interest rate in the US and the Japanese yen is so vast that overall the factoring in there for individuals looking at the better interest rate between the two pairs is going to be the US dollar. And with rates looking like they're going to stay higher for longer, that US dollar interest rate remains very attractive to investors. This is overall bolstering the dollar to a higher price and keeping that Japanese yen very weak. With US dollar yen now pushing even higher, looking at that 161 level, it's going to be super important to watch. We are overdue intervention from the BOJ. The question here is, are you going to buy the dip and see US dollar yen continue on that rally? Is there an opportunity? Let's head over to the charts and break down the currency pair now from a technical point of view. Okay, so let's have a look at the charts now. So we've got US dollar yen loaded up here, and you can see this green line which I've highlighted here, which is showing when the last intervention was with the Bank of Japan. It was on the 1st of May. So price went up, reached that 160 level, and then the BOJ made that decision to intervene. Now, when we break this down a little bit further, to make that market move, the market moved from high to low here of around 3.5% to 4% drop there on the currency pair. And that move on the US dollar against the Japanese yen pair could have cost the Bank of Japan $23.6 billion. So you can see how much it costs to intervene. And overall, you can see that we're now trading above that previous level that triggered the BOJ. You can see we're well above that level now, meaning that any time now in the coming weeks, we should see the Bank of Japan intervene if the price stays this elevated. Now, overall, traders saw what happened last time, saw what happened in the previous interventions, and overall the pair continued to strengthen. US dollar against the Japanese yen continued to make new highs. So when we break this down, where are the opportunities? If we look at the 1 hour time frame, you can see that there's plenty of opportunities to be able to buy into these dips that we see happening within the markets. So whether you are a day trader, whether you are a swing trader, these opportunities are going to be arising in the coming days and weeks. So it's definitely a pair that you should be having on your watch list. Last time, it didn't take long for price to actually rebound and come back up and start recovering. So when we start looking at that, we can see a dip here, 1 opportunity, 2 opportunities, 3 and 4. Ever since this period of around the 11th of June onwards, you can see when we break the price down on here, it's actually more beneficial for us to look at smaller time frames, such as the 15-minute chart. And on here, you can see that using tools like Cluster, you can see it's highlighting potential dips that we could buy into this market and take full advantage. This is what I call the best of both worlds, where we're taking into account that fundamental analysis of where the currency pair is going and why, based off of economics, and then drilling down into the technicalities of that chart and looking at those opportunities. So overall, I'm bullish on US dollar against the Japanese yen, at least for the next couple of weeks. I'm going to be super excited and sit here waiting for when the Bank of Japan intervene on this, because overall I'm going to be looking to buy that dip, because we know that they will not continue to carry on with that pumping, because 23.6 billion is no small cost. So we anticipate that that drop will be short and overall will end up recovering to the upside. These are preventative measures that are put in play, and overall I want to take full advantage of that. That doesn't mean that I'm going to be looking to short this pair, because overall fundamentally it's naturally increasing in value. I'm just going to be using their intervention as buy the dip approach. Overall, simple risk management, 1% risk per trade, and I'm going to be looking at targeting the previous highs. Overall here, when we're looking at the chart on the US dollar against the Japanese yen, you can see when we're trading on the 15 minutes, because of how this is aligned technically and fundamentally, there are some fantastic opportunities of buying in on the retrace and targeting back in at previous highs. You can see target hit there, or if you didn't, it would have gone on. You could then buy in again on the next one, targeting previous high. Buy in again on the dip, targeting previous highs. Any one of these again, targeting previous highs. The question is, I'm more excited about on the hourly chart is now waiting for those big drops to happen. If I can get a similar move to what has happened historically like this, we can anticipate that we might see a similar move of around 3.8 to 4%. So assuming the move is going to be similar again from where we are, we could anticipate, I mean, anything past the 3% drop looks very nice, but anywhere coming around to this previous low here. Now, if we see that, what a great opportunity for us to be able to ride the correction and take full advantage of this fundamental shift that we should be seeing from the Bank of Japan. Let's just get this right. This is not guaranteed. And if I see a reasonable dip before their intervention, I will still be taking that trade to take full advantage of the move. If I get stopped out, I lose my 1%, and overall I'll wait for that big move on the intervention and hopefully make 3 to 1s, 4 to 1s or 5 to 1s from that opportunity. This is what I call common sense trading in the Forex market, aligning the wider fundamentals, the economic outlook, and then drilling down to the chart and taking into account those technical levels. So keep an eye on a 3.5 to 4% drop, because that's what we saw last time. Anything more than that is a bonus. If you've enjoyed this content, make sure we thumbs up, comment, and subscribe.